The billion-dollar question: can Doge really hit $1.90? Dogecoin. The name itself often brings a smile to people's faces. It started as a joke, a lighthearted jab at the serious world of cryptocurrency. Yet, here we are, years later, discussing its potential to reach a price target that would place its market value among some of the largest companies in the world. The question on everyone's mind, whispered in forums and shouted on social media, is simple yet profound. Can Dogecoin actually reach $1.90? This isn't just a random number pulled from thin air. It represents a monumental leap from its current valuation, a milestone that would turn early believers into millionaires and silence skeptics for good. But is it a realistic possibility, or is it just another fever dream fueled by internet hype? This question matters more than you might think. For many, Dogecoin was their first entry into the volatile world of digital assets. Its friendly community and low entry price made it accessible to millions of everyday people, not just seasoned investors. The journey of Dogecoin is, in many ways, a story about the democratization of finance and the power of collective belief. The conversation around Dogecoin is often dominated by extreme emotions. On one side, you have the passionate believers, the Doge army, who see its potential as limitless, driven by a powerful community and high-profile endorsements. Their conviction is unwavering, and for them, $1.90 is not a question of if, but when. On the other side, you have the staunch critics who point to its inflationary supply and lack of technical sophistication compared to other projects. They see it as a bubble waiting to pop, a classic example of speculative mania with no underlying substance. Our goal today is to cut through that noise. Instead, we are going to take a sober, analytical look at the $1.90 question. We will break down the numbers, examine the historical trends, and map out the potential scenarios, both good and bad. Let's find out what the numbers truly say about Dogecoin's ambitious target. To tackle this complex question, we need a clear and structured plan. We won't be relying on gut feelings or chasing headlines. First, we will dive deep into Dogecoin's tokenomics. Total number of coins in existence, how many new coins are created each year, calculating the resulting inflation rate. A price of $1.90 implies a specific market capitalization. We must understand its context and scale. Unlike Bitcoin, which has a hard cap of 21 million coins, Dogecoin's supply is not finite. As of our current analysis in mid-2024, the total circulating supply of Dogecoin is approximately 144 billion coins. When you hear a price prediction for any cryptocurrency, your first step should always be to multiply that price by the circulating supply. The developers decided to fix the block reward at 10,000 Dogecoin per block, with a new block being added roughly every minute. This creates a steady and, predictable flow of new coins into the market. So let's do the math on that issuance. With 10,000 new Dogecoin created every minute, we can calculate the annual new supply. We find that approximately 5.256 billion new Dogecoin are created every single year. For the price to go up, demand must not only match but significantly outpace this new supply. This gives us an annual inflation rate of about 3.65% as of mid-2024. The inflation rate actually decreases over time. This is what's known as a disinflationary model. Now we arrive at the core of our mathematical exercise. Multiply $1.90 x 144 billion. That equals $273.6 billion implied market cap. That size would make Dogecoin the third largest cryptocurrency. A $270 billion market cap puts Dogecoin in the same league as global corporations, comparable to Netflix, McDonald's, Nike. The global operations, the physical assets, the intellectual property, and the hundreds of thousands of employees of those giants would be valued on par with a decentralized network that started as a joke. To get to $270 billion, tens, if not hundreds, of billions of new dollars must flow in. To understand how Dogecoin could possibly reach $1.90 in the future, we must first look to its most explosive period in the past, the legendary bull run of 2021. It was powered by a tidal wave of retail investor interest amplified by social media and given a megaphone by high-profile endorsements. This combination created a powerful feedback loop. Rising prices generated social media hype, which drew in new buyers, pushing prices even higher. We cannot discuss this period without mentioning the influence of key personalities, most notably Elon Musk. His playful and at times cryptic tweets about Dogecoin acted as rocket fuel for the rally. The key lesson from 2021 is that Dogecoin's price is exceptionally sensitive to narrative and speculative fervor. Beyond the charts and celebrity endorsements lies the true enduring engine of Dogecoin: its community, fun, inclusivity, a shared sense of humor, do only good every day, charitable fundraising campaigns, funding clean water projects in Kenya, sponsoring a NASCAR driver. To reach $1.90, this cultural engine must fire on all cylinders. One of the most powerful forces in the cryptocurrency market has little to do with Dogecoin itself. It has to do with Bitcoin. This is called the capital rotation cycle. First, capital flows into Bitcoin, then rotates. Eventually, it rushes into speculative, culturally driven meme coins. The most recent Bitcoin halving happened in April 2024. Historically, the bull market peak for altcoins occurs 12-18 months after a halving. That points to a potential peak in mid to late 2025. The price of speculative assets is incredibly sensitive to global liquidity conditions. When central banks lower interest rates or inject money into the economy, they turn on the liquidity tap. The combination of two powerful tailwinds, a crypto-native cycle and a global macro-financial cycle, could create a perfect storm for Dogecoin. The most speculative catalyst for Dogecoin: a massive killer app integration. The most frequently discussed candidate is X, formerly Twitter. Tip creators, pay for premium services, conduct peer-to-peer payments, all with Dogecoin on platform. The price impact would likely be immediate and dramatic. Confirmation could trigger a speculative frenzy beyond 2021. But this is still pure speculation, a high-impact, low-probability catalyst that could, in theory, make $1.90 seem attainable. While catalysts can provide powerful upward thrust, Dogecoin faces a constant gravitational pull in the opposite direction: its issuance model. The network creates a fixed 10,000 new coins every minute, which adds up to over 5.2 billion new Doge every single year. These miners have significant operational costs. To cover these expenses and realize a profit, they are often forced to sell a large portion of their newly minted Dogecoin. This creates a reliable and constant source of sell pressure. Dogecoin may be the original meme coin, but it is no longer the only dog in the park. Projects like Shiba Inu spawned an entire subsector of the crypto market, with thousands of imitators and competitors. Each dollar that flows into a competing meme coin is a dollar that could have flowed into Dogecoin. Beyond the meme coin arena, Dogecoin also faces technical limitations. It lacks the smart contract functionality of platforms like Ethereum or Solana. Like all cryptocurrencies, Dogecoin operates under a cloud of regulatory uncertainty. A sudden and harsh regulatory crackdown could have a chilling effect on the entire market, and Dogecoin would not be immune. For Dogecoin specifically, its perception as a highly speculative, meme-driven asset could make it a particular target for regulators. Another significant internal risk is the concentration of ownership. A very large percentage of the total supply is held in a small number of wallets. A decision by just one of these whales to exit their position could single-handedly halt a bull run in its tracks and trigger a cascade of panic selling. The question of whether Dogecoin can reach $1.90 is not a simple yes or no. It is a question of probabilities and pathways. The first is the bearish echo scenario. In this reality, the 2021 rally remains the historical peak, with its price struggling to reclaim even half of its previous all-time high. The second path is the bullish repeat scenario. Here, history rhymes. Dogecoin successfully challenges its previous all-time high and potentially pushes towards the coveted $1 mark. The third and most speculative scenario is the perfect storm. This is a reality where everything goes right. The primary trigger would be the official integration of Dogecoin into the X platform. So, can Dogecoin reach $1.90? Our balanced verdict is that while it is not impossible, it is an extremely low probability event that requires a convergence of nearly perfect conditions. An investment in Dogecoin is a bet on a cultural movement, A bet on narrative, and a bet on the continuation of market dynamics that defy traditional financial analysis. This analysis was conducted to provide a data-driven framework, not to give financial advice. Every investor must conduct their own thorough research. The story of Dogecoin is a fascinating chapter in the history of finance, demonstrating the undeniable power of community, memes, and collective belief in the digital age. Whether it reaches the distant star of $1.90, its journey has already taught us invaluable lessons. Its future remains unwritten.